Welcome to today's Explainer. Look, I know a ton of you are sitting on the sidelines right now, just waiting for that quote-unquote perfect time to buy a home. But, well, here's the hard truth we've got to address right out of the gate. While you've been waiting for the stars to perfectly align, just renting year after year, home prices have absolutely skyrocketed, up 45% since 2020. Seriously, 45%. So today, we're going to build your ultimate 2026 first-time homebuyer strategy guide so you can stop waiting, take back control, and finally start owning.
Let's jump right into this by completely dismantling the two biggest myths that are probably keeping you trapped in that endless rental cycle. I hear this all the time. People think they absolutely must have this massive 20% down payment saved up, plus a pristine, picture-perfect credit score to even think about buying a house. But the reality? You need way less than that.
Get this, the actual median down payment for first-time buyers in 2026 is just 9%. Yeah, not 20, 9%. And depending on your specific situation, FHA loans actually let you get into a home for as little as 3.5% down. The barrier to entry is just dramatically lower than what those old myths lead you to believe.
And honestly, I want to assure you that the biggest barrier to homeownership in 2026 isn't actually a lack of money, it's a lack of information. So here is our exact roadmap to get you to closing day. First, the 4 readiness tests. Second, choosing your loan type. Third, hidden down payment funds. Fourth, the step-by-step roadmap. And finally, number 5, winning the 2026 market.
All right, section 1, the 4 readiness tests. These are the critical financial checks you absolutely have to pass before you even think about opening a real estate app or looking at a single listing. So test number 1, what is your actual credit score? Now, recent data shows that the median credit score for first-time buyers was 746, but please do not panic if you aren't quite there yet. If you're looking at an FHA loan, you can actually get approved with a score as low as 580 to qualify for that 3.5% down payment. And honestly, it's wild, but you can go as low as a 500 score if you're able to put 10% down. But here's the crucial thing. You really need to understand how much your credit score actually costs you out there in the real world. If your score is just 60 to 80 points lower than the top tier, your interest rate jumps by about 0.4 to 0.6 percentage points. On a typical $300,000 loan, that's going to add $75 to $150 to your monthly payment. Now, over a 30-year mortgage, that seemingly small difference costs you $27,000 to $54,000 extra dollars in pure interest. It's crazy. So if your score is below a 620 right now, take 6 to 12 months to repair it. It is quite literally a $50,000 decision.
Okay, moving to test number 2. Is your debt-to-income ratio, or DTI, under 45%? Lenders essentially want to see that your total monthly debt payments, divided by your gross monthly income, sits at 45% or lower. And as a solid rule of thumb, your new monthly housing payment shouldn't eat up more than 28% of your gross income. If your student loans, car payments, and credit cards are already gobbling up 35% of your paycheck, adding a mortgage on top of that might push your DTI way past what any lender will approve. You really got to pay down that debt first.
Which brings us to our final 2 tests, savings and stability. Simply put, can you cover the 2 to 5% in closing costs? Remember, on a $300,000 home, we're talking about $6,000 to $15,000 in cash that you need right on top of your down payment. Plus, lenders really want to see stability. They're typically looking for 2 years stable job history in the same field. It doesn't have to be the exact same job, but it does need to be the same field. If you can check these 4 boxes, you're good to go. On to section 2, choosing your loan type. This step is absolutely vital because the specific loan you select is going to dictate your required down payment, your monthly interest rate, and whether or not you're stuck paying for mortgage insurance. All right, so you basically have 4 main options to choose from here. First up is the conventional loan. Now, this requires just 3% down for qualified first-time buyers with a minimum 620 credit score, but you will pay private mortgage insurance, or PMI, until you hit 22% equity in the home. Then we've got the FHA loan. That's 3.5% down with a 580 score, but keep in mind the mortgage insurance premium on that one stays for the life of the loan. Next is the VA loan. Guys, if you are a veteran or active military, this is hands down the most powerful benefit in America. 0 down, no PMI, and no official minimum credit score set by the VA. And finally, the USDA loan for eligible rural and suburban areas, which is also 0 down.
Section 3, hidden down payment funds. I love this part. I call this the secret knowledge segment of our explainer. Did you know there are over 2,000 down payment assistance programs nationwide? They're available right now through HUD.gov and downpaymentresource.com. And honestly, there is a total tragedy unfolding in the housing market right now with this. Nearly 70% of first-time buyers are completely draining their personal savings just to come up with a down payment. And they do this largely because they just don't know they might actually qualify for thousands of dollars in free grants that never, ever have to be repaid. One of the absolute most powerful tools out there is a forgivable loan. Basically, this is a zero-interest second mortgage that gets completely forgiven as long as you stay in the home for a set number of years. A lot of states offer these programs to cover 3% to 5% of your purchase price, which, if you think about it, can effectively wipe out your minimum down payment requirement entirely. I mean, it is literally free money, and yet most people never even try to claim it.
All right, Section 4, the step-by-step roadmap. Now that your finances are in check and you've hunted down those hidden funds, this is your ultimate chronological battle plan, from the exact moment you decide to buy all the way to getting the keys in your hand. So here's a look at your macro timeline. About 6 to 12 months out, you need to be checking annualcreditreport.com, and please absolutely avoid opening any new credit accounts. Seriously, whatever you do, do not go finance a new car right now. Next comes pre-approval, where you're going to shop around with lenders before you even look at houses. Then, once you find the one, you'll be under contract for roughly 45 to 90 days. And finally, just 3 days out from the finish line, you'll receive your super important closing disclosure. Now, during the active shopping phase, you really want to follow these exact steps. Step 1, get pre-approved by at least 3 lenders. Fun fact, over 60% of buyers who take the time to shop multiple lenders end up getting a better annual percentage rate. Step 2, find a dedicated buyer's agent who really knows your specific area. Step 3, shop strictly within your 28% budget, okay? Not the absolute maximum the bank offered you. And Step 4, make your offer based on comparable sales in the neighborhood. And just to give you some context, keep in mind the median home price nationally in 2026 is sitting right around $415,200. Okay, I urgently need to warn you about 3 fatal mistakes that totally kill deals and can honestly ruin your finances. First, waiving the home inspection to make your offer look more competitive. It's incredibly dangerous. A $400 inspection can uncover a hidden $40,000 repair nightmare and literally save you from financial ruin. The other huge deal killers, skipping that mortgage comparison shopping we literally just talked about and spending above your pre-approval limit. You've got to avoid these at all cost. So once your offer is finally accepted and you pass that inspection, you hit the home stretch. Step 1, lock your rate. Step 2, exactly 3 days before closing, review your closing disclosure super carefully and compare it to your initial loan estimate just to make sure no sneaky little fees got added in there. Step 3, pay those remaining closing costs. And Step 4, get the keys to your brand new home. Which brings us to our final section, Section 5, winning the 2026 market. Now, as we wrap things up here, I really want to validate what you're probably feeling right now. The 2026 market is genuinely hard. I mean, prices are high, rates are definitely higher than those crazy pre-pandemic lows, and the competition out there in a lot of areas is incredibly fierce. But while it's hard, it is absolutely not impossible. Let's just summarize the main core takeaway of this whole explainer. You don't need 20% down. You don't need perfect credit. You have options. You now have the actual roadmap to leverage things like FHA loans, zero-down VA or USDA loans, those hidden assistance programs, and just smart financial prep to make homeownership a reality. You are no longer restricted by those outdated myths. So, I'm going to leave you with this final provocative question to reflect on regarding your own journey. Are you currently saving, actively shopping, or had you honestly just given up before watching this? Drop a comment down below and let me know your status. I genuinely read every single one. Thank you so much for joining me on this explainer. Keep your head up, stay focused, and I'll catch you next time.
वीडियोस बनाने हैं, फिल्मोरा है ना।